The trade war with China and the United States is getting worse and not better. A lot of folks had hoped that this weekend we would get some good progress on trade negotiations, but it turns out we got the opposite. We got worse problems with China, threats now from China against the United States and a lot of other countries around the world. On top of this, markets reacting with the classic Sell America news. So far, index futures down 1% across the board for U.S. stocks. Gold skyrocketing to all-time highs over $3,400. Oil falling under recessionary fears. Yeah, we'll talk about that as well. And worse, the 10-2 spread, for those of you following the bond market, 62 basis points. This is shock level, which isn't great. Also comes, by the way, as Mark Zuckerberg of Facebook just dumped $733 million of stock in the first quarter. That's almost $1 billion that Zuck dumped. Maybe this is because some people believe that recessions will really negatively affect advertising-based stocks, which Meta is one of the largest of. But even Jamie Dimon over at JP Morgan dumped $233 million worth of stock. So some people are kind of scratching their heads going, oh, wow, this is a lot of dumping by these executives. What do they see coming? Well, I doubt the trade war with China escalating this far is what anybody saw coming. And so I wonder if that selling will continue from some of these execs, but we'll see. So here's what's going on. The elephant in the room this weekend was really China, and that's because China has so far been relatively unwilling to bend to Donald Trump's negotiations. And Donald Trump isn't used to that. Donald Trump is used to most corporations or people in the United States, at least, bending the knee to him, potentially out of a fear-based motivation. Companies don't want to lose business. They don't want to get legally in trouble. They don't want an army of Trump lawyers coming after them, so to speak. And they don't want, funding that comes potentially or is directed by the U.S. government to be stripped away from them. So bending the knee to Donald Trump has been very, very common for a lot of businesses. I mean, we saw it. We saw this complete U-turn even at companies like Meta, and that actually really helped those companies' stocks. Saw their stocks skyrocket under the support for Donald Trump. Now, though, that same sort of support for Trump that people thought China would bring to negotiations, that they would bend the knee to Donald Trump, is really being met with a complete opposite reaction. China now issuing a warning that anyone that makes a trade deal with the United States against China will receive, quote, reciprocal countermeasures immediately from China. So think about this. Trump used to people bending the knee to him, used to, for example, Japan coming saying, hey, what can we do to trade with you? Mind you, rumors are suggesting that the Trump administration actually had a challenging time putting together what they wanted from Japan. And so Japan just left without a trade deal, maybe because we haven't really figured out exactly what we want from other countries yet, which isn't great. Donald Trump posted on Truth a list of about 8 different things that he wants to see from countries. But the problem is, it's not entirely clear which apply to which countries. So, for example, on his, quote, non-tariff cheating list, no currency manipulation, which, mind you, our dollar can weaken and fluctuate as well in response to tariffs. No VAT taxes, no dumping below cost, no export subsidies, other government subsidies. So, in other words, that would be somewhat like saying if we subsidize the green energy sector, like electric vehicles, that would create unfair competition against other electric vehicles of other countries. Which, again, that's an example of us doing it. Donald Trump says that is also considered a tariff style of cheating. Anyway, protective agricultural standards, none of those, doesn't want those, doesn't want protective technical standards, no counterfeiting, IP theft, piracy, this makes sense, and no transshipping to avoid tariffs, in other words, shipping products through different countries. But again, explaining exactly what they want from each individual country seems to be a challenge, and it seems to be what's delaying a lot of these trade negotiations. And in order to try to force deals against China, there's been talk that the Trump administration has been trying to get other countries like Japan or Taiwan or South Korea to basically promise to do less business with China and more business with the United States. But because tariff policy has been so unclear, the opposite is happening. Other countries, and even blocs like the European Union, the ASEAN bloc, or other Asian countries, saying, we'll just work more with China. because at least there we have a pretty clear outline of what to expect. And China is capitalizing on this. China has been preparing for this moment probably for the last 8 years, and now they're really taking advantage of the clarity that at least people get, potentially, when trading with China. Now, here's just an example of some of the Chinese propaganda, but frankly, when you look at it, it's like, well, it's not entirely untrue. China is committed to... And hey, quick note, those of you looking to diversify, make sure you check out househack.com. You can see what we do with real estate, how we're buying the dip later this year. We're open for non-accredited investors. We've got existing real estate you can see on the website. And so if you want to diversify into some real estate exposure, you get 100% of the upside in the company's stock. You get 5% as a yield, an annual yield paid to you, and you can diversify into real estate without having to deal with the property management, the fix-up, the negotiating, the buying, or all the hassles. We do it all for you while you get that 5% yield and 100% of the upside in the stock and downside protection. Check it out. Go to househack.com. You can learn a whole lot more about what we're doing, how we do it. You can see the actual buildings that we own. So go to househack.com to learn more. Opening up. Give all the latest developed countries basically zero tariffs. National negative list for foreign investments slashed. Remove all market access restrictions. Okay. And then on the U.S. side, they allege that we have frequent changes in U.S. tariff policy, which is unsettling the global stock market, basically making it hard to do business with the United States. U.S. frequently launches industrial investigations in the name of national security. This, by the way, is being compounded now by China's push to get Huawei to manufacture as many chips as possible to kind of beat up on the U.S.'s NVIDIA. Which makes sense. Here's just another example, though, of which is one of the reasons why, by the way, NVIDIA stock is down a bit here in pre-market, down 3.2% in pre-market. But here's just another example of at least some of the Chinese talk that is going on. Chinese embassy in the U.S. reposts this post here, where an individual says, "We will continue to open rather than close our doors, tear down rather than erect barriers, empower the world rather than focus solely on self-interest, and bring more stability and certainty to the world with our high-quality development and high standards." Opening up. So in other words, trying to say, please, and we've talked about this for weeks, but China's basically doing the, spread the legs, basically, come to me, baby. Whereas the United States is like, we want certain requirements. All right, what kind of requirements do you want? Well, I haven't figured it out yet. Give me everything. and that's probably why we just haven't actually seen deals announced yet. So there's this talk that Donald Trump is going to make all these deals, but we're not seeing them yet. Instead, we're seeing the opposite. And this is why the Wall Street Journal is now reporting that these tariffs and this tariff warfare is sort of like a new Cold War. That really, one of the reasons we didn't have a Cold War with China previously is because we had trade. This is basically the democratic peace theory at work. The more we trade, the less we fight, the less we war. And so there's this idea that trade was the glue that kept China and the United States together. But today, it's becoming harder to argue that we're not in a new Cold War. And we're going to probably see more and more of either CATL producing newer, more globally competitive batteries, BYD, more globally competitive vehicles, Huawei, more globally competitive AI chips, to really try to reduce the United States' dominance in these pretty growthy sectors, which is to the detriment, again, of the United States. I mean, per Bloomberg, Boeing is now flying back somewhere around 160 Boeing 737 MAX jets that China ordered, and now they're refusing, and they're like, you know what, take them back. We don't want your American jets. Just quite interesting because they're manufactured with a lot of Chinese intermediate parts, but whatever. Canada is also now promising to cut taxes and focus on basically going into deeper debt to reduce its reliance on the United States. And I think a lot of people forget that this is exactly what countries will do, is they will take on more debt to get through this recession that's coming, whereas at the same time, the United States is relatively unwilling to take on more debt. And so this makes growth in the United States not look that great. I mean, Apollo put together some interesting research. They actually think we now have a 90% chance of going into recession. You could see, I didn't post that on here. We have a 90% chance of going into recession But one of the sort of the supporting documents that they put with this was that small businesses account for 85% of capex in the U.S. economy. And I thought that was interesting because initially we think of Meta and NVIDIA and Microsoft as these sort of big capex plays in America, but that might only actually represent 15% of our economy, according to Apollo. That small businesses are really what drive our economy. We know they employ about 48% of all employees, small businesses do. But to account for 85% of all capital expenditures, infrastructure spending, machinery, electrical infrastructure, you name it, this was surprising to me. And so they say we face significant headwinds, including not just tariffs, but retaliation, lower tourism, uncertainty about how permanent tariffs are, lower confidence, lower corporate confidence, negative wealth effects, Doge laying off workers. All these things together are negative externalities that are essentially directly affecting our economy. Now, Goolsbee was on CNBC this morning, and he says, look, we really just have to get through this. Imports are only 11% of the economy, so maybe tariffs won't be that bad. But we're going to have to get through this waited out period where people decide not to spend and see what kind of damage that actually causes to the economy. Is this going to be like a COVID level shock or what? See, a lot of people are begging on social media right now about how, oh, well, trueflation is low, the Fed should cut. Yes, inflation reports are low right now, but that doesn't mean they're going to continue to be low in the face of all of these tariffs. Apple now moving iPhone 16e production, for example, to its Brazil Foxconn plant. But how much is that going to get tariffed? We don't know yet. We have a 90-day pause, so technically only 10%, certainly lower than what we're getting in China. But then again, you have certain tariff exemptions in China, with the exception of the fentanyl tariffs. So there's a lot to navigate here. And can Apple produce enough phones in Brazil? So until we get these answers on where we're going to be with tariffs, it's very difficult to determine where the economy is going to go. And it seems like most analysts on Wall Street are now positioning for a U.S. recession of some form. Now, typically what you find is in 2005, 2006, everybody argued that we were facing a soft landing. This would just be a slowdown, that we're not going into any kind of recession. But what happens is, remember that 10-2 spread I talked about that was now over actually 60 basis points? When this is above 50, we are primed for what I call a shock. We don't necessarily know what that shock is going to be yet, but that shock makes us very vulnerable, or we become very vulnerable to a shock when Treasury spreads are above 0.5 after we've fully inverted and deeply inverted like we had following COVID just over the last couple of years here. And so what we now face is a shock situation in the bond market, which is probably driven by people basically buying shorter term bonds, not having the trust in the longer term bonds. So the longer end of the curve is getting sold off, anti-American. The shorter term gets bought as a nearer term hedge. Now we're shock prone. And the question is, what happens? Like, where's the credit event? Is it a BNPL credit shock? Is it a leveraged buyout shock where all of a sudden businesses can't get access to credit anymore? We don't know what it's going to be. This is sort of that black swan moment. But what we do know is that this drama with China getting worse, not better, increases the odds on a daily basis that we are going to experience some form of incredible shock. And yet, so far, we have not seen retail capitulation in the stock market. So far, most people have been buying the dip, at least in the retail community. It's mostly just been hedge funds that have been selling. So the question is, should we keep buying the dip? Or do we wait for a shock and the Jerome Powell Federal Reserve 180 and complete bailout of markets? Right now, my preference is to wait, but everybody's got their own POV. I like waiting for when the Fed is panicking, because that's usually when everyone is panicking, and that's when I like to buy. That said, let's see what happens. Thank you so much for watching. I appreciate you, and we'll see y'all in the next one. Goodbye and good luck.
Why not advertise these things that you told us here? I feel like nobody else knows about this.
We'll try a little advertising and see how it goes.
Congratulations, man. You have done so much. People love you. People look up to you.
Kevin Paffrath there, financial analyst and YouTuber. Meet Kevin. Always great to get your take.